Good morning. Oh.
So, am I audible and visible now?
Yes. Sagar, hi.
Yeah, thanks.
Good. So, I think we'll start at 11:30, right? लोग join करते रहेंगे फिर.
Yeah, Rajnish, hi, this is Rehan here, this side.
Hi,
Okay.
Rehan. Hi.
Before we start the session, let me, tell you the house rules. Okay.
Okay.
While the presenter is sharing the presentation and he is continuing with this talk, I request all the participants to be on mute mode. Okay. Do not turn on your mic. So it will be, a sound glitch during the session. And if you want, you can unmute your videos, or by the Q&A session, if you have any questions, you can just go ahead and unmute yourself and raise hand, and you can ask the questions. Okay?
Right. Okay.
Yeah. So Sagar, we have almost reached around 11:30. So if you are good to go, we can start the session.
Yeah, sure. We can start with the session then. Right? Hello? Yeah. Am I audible and visible to everyone?
Yes, please go ahead.
Last check. Yeah, thanks. So, as this title is already telling us, it is a learning series of the learner, by the learner, and for the learner. So, first disclaimer, I am not a professional, right? I am not an expert, I am not an advisor, right? This is my enthusiasm, this is my passion, and this is my hobby, and I used to do this, right? And this is just, I am sharing it with my knowledge, what I have learned till now, and through my journey of attaining the financial freedom down the line, maybe few years, right? So starting with the session, right? This is our brain, right? It's a puzzle brain, right? In this season right now, we must be expecting increments. We must be having maybe we must have received the variable salaries right now, right? Variable component of the salary part, right? So everyone must be having some of the plan before it is going to come, that as soon as the arrears will come, or as soon as my variable will come, right? What I'll try to do. So can anyone unmute first, and can you able to just have a fire that what are your priorities of whenever if you get any arrears of around whatever the amount is, 10, 15,000 or maybe 1 lakh, right? Irrespective of it, you must have planned something, right? So what are the first thing that you have planned in your mind? So can anyone able to please share me a few things?
I plan to do clear off the part payment of my home loan. For example, if I get some quantum of money.
Okay.
Same here, Sagar. I plan to repay my loan.
Okay. What else?
Invest some amount in mutual fund and some amount in FD.
Okay. What else? Anyone, ladies? Jennifer? Anyone from the girls' side?
I think she has written in the chat that she wants to invest in the mutual funds.
Okay. Yeah. Thanks, Rajnish, for reading, because I won't be able to see. So if you can able to help me in the same way. Thanks, Rajnish. Yeah. Anyone else? Okay. No issues. Let's start. Right. Maybe few of the thoughts, or the basic thing is I want to purchase few of the things. Right. Maybe you need to purchase your mobiles, you need to purchase your few of the white goods for your households, right? Second, the way Parth and Deepan and Rajnish Bhai have told that I'll try to repay my loan, right? After your priority of the loan, your second will be that me and my wife or my kid will go to some holiday or for a staycation of 1 or 2 days, right? And after that, we used to plan for the savings, right? See, this is a right now investment session, so everyone won't be able to free up their mind, right? So I know, but savings and investments comes last in the in our mind, right? First will be, yaar, Amazon mein scheme chalu hai, sales chalu hai, right? Flipkart is having this scheme, so we buy 50% off is going on. So we buy maybe unnecessary things only to lure because they are luring the customers by having this type of promotion. So first, people always buy few of the things, irrespective of the money, whether it will be 100 rupees or maybe 10,000 bucks, but that is not needed, right? But that is the first part that it comes in a mind. Then loan, then holiday, and then savings. This is just as per the research. I am actually telling you, it is not my perception or my observation. This is as per the research, right? So now, okay, sorry. If you tell me, right, if you want to do for the savings or if you want to know for the investments, right? For example, if I'll ask anyone that, can anyone able to tell me which are the top websites for shopping? Can anyone able to come down, unmute your mic, and can anyone able to tell me which are the top websites or applications for the shopping?
Amazon, Flipkart, Mantra.
Okay. What else?
Right. Amazon, Madhurima says Amazon, Flipkart, Paytm, Bhavesh.
And which are
Tata Click.
which
Tata
are the
Click.
type of the loans that you
Tata
are aware
Click.
of it till now? How many types of loans are there?
Okay. Personal, home, and vehicle, auto,
Property loan, gold loan.
mortgage, education.
Okay, thanks. Holiday destinations, we have innumerables. What are the saving options?
Okay.
PPF, FD,
Equity,
Mutual
FD, RD,
funds,
mutual funds.
Post
Agreed?
office,
post
Yeah,
office,
post office.
national
Yeah,
pension
agreed.
Sukanya,
saving.
Sukanya Samruddhi,
Bonds be there, I guess. Bonds also.
Got it. Fair enough.
bonds.
I got your ideas. Yeah. Thank you so much. Thank you so much for the participation. Right. So just coming to the investment options. See, I have grid this investment options as per the as per the mind share, how it is actually occupied in our minds. Right. First and foremost things, including me, myself, and including I'm just trying to tell you that this is the first option we must have opted out in our career. When we have started our career, maybe down the line 8 years, 10 years, or maybe 15 years, first we have opted out for the LIC policies, right? At least I have, right? So first was the LIC policy. Then second comes to your mind is the PPF or RD or FD, gold, NPS, NSC, ELSS, mutual funds, IPOs, bonds, liquid MF, right, and equity. So hope so. Are you aware of all these options or not till now, right? And if you are aware of all the options, very good. Now we need to understand the pros and cons of each and every option. So why the LIC policy is biggest in orange and why equity is brown and so smallest in the very tapering zone, right? Why it is why it is having a very low mind share? Only because first we all have a LIC policies, right? Then we used to invest in a PPF, right? Then we have either into the RD or FD or gold. Can anyone have is this a correct or maybe one or two points will be ups and downs, but I think so more or less it will be as per this sequence. I just want a quick check from any one of you, if you can able to answer.
Exactly.
Just in a yes or no, at more or less. I'm not telling that each and every damn step should be like in the sequence, but I'm just trying to understand that more or less.
Ankit Malde says yes. Haley says yes. KU says yes. Jennifer, Pranjal,
Yes.
everybody is saying yes.
Yeah, Sagar.
Sequence of the events are more or less.
Hello.
Sorry.
Sagar, in addition to this, we have real estate investment.
Yeah, agreed, Deepak bhai. Yeah. So more or less the mind share is occupied by this, right? Now we need to understand what are the pros and cons of each and everything, right? So first, PPF. I'm starting with the PPF. So Deepak bhai, LIC policies and real estate, the way you have raised the question, I have tried to answer the same thing in the subsequent slides. So your questions will be there. Your question will be answered. So if you see the PPF, NPS and ELSS pros and cons, right? PPF, you are having a more interest rate rather than the FDs, but returns are tax free. And it will take around 9 years to double the amount. At the same time, what are the cons? You can't able to withdraw the whole amount, right? You can able to withdraw only partial amount after 6 to 7 months of locking period, and you cannot close it, right? This is a basic problem with the PPF, right? But it is a good tool. NPS, again, returns is 8 to 10%, takes around 7 to 9 years to get it double. But NPS, you can't withdraw even after the age of 60 years, right? Which is tax free, and the rest is 40% of the amount. You need to kept it as a constant only because you need to withdraw the rest of the pension amount at the uniform period of time for the specific time, right? So you can't withdraw it fully because you are actually reaping the benefit of the NPS, right? ELSS, approx 10 to 11%. It varies as per your the schemes. It will be opted by you, right? It will take around 4 to 6 years as well for the to take your investment doubles, right? But it is no doubt equity linked saving scheme. ELSS means equity linked saving schemes, but they are having LTCG, right? That is long term capital gain tax as well. So if your amount is more than if you are investing and withdrawing more after 3 years, right, your total amount will be deducted by 10%, right? So there are cons of the ELSS as well. Now coming to FD and RD, right, that is fixed deposit and recurring deposit, that what we used to opt. So approx returns is around 7%, and it takes around 11 years to get it double right now. And right now only senior citizens, I think so, are getting around 8%. Rest is on 7 to 7.01%, right? It varies at least by 0.25 basis points from private banks to public sector banks, PSUs, right? Returns on the 3-year FD vary from bank to bank, right? Usually in a range of 6.5 to 8, and there are no tax benefits. NSC, again, approx return is 7.6, right? Investment takes around 9.5 years. Earnings are 7.6% per annum, but NSC can be pledged, right? During taking loans as a moratorium, you can able to keep it, and it will going to have more benefits because you can have a good CIBIL score. People can it will have a credible. This is a good credentials that you can able to have a top up loans as well, right? But at the end, it is a very less returns, right? Coming to the bonds, right? Bonds, very few people invest in the bonds right now, right? I don't think so even people are aware of the bonds in right now. If we are having a participants of around 50 to 55, right, I am damn sure maybe around 5 people are aware of bond and what is bond, how much return does it get, and how it operates. I think so maybe 1 or 2 people, right? Because bonds it is not a good investment tool, right? It's not my perception, but it has not been proved as a good investment tool till now, right? Because approx returns are 7 to 10%, and it takes 7.2. Interest rates are risk. Interest rates risk, and interest earns is taxable, right? At the same time, few of the bonds, like recently we have a default of around 51,000 CR by big large cap of ILFS, right? So many government ASU bonds, government PSUs have already invested in ILFS bonds, right? And it went bankrupt. But if you have invested in it, right, it is already linked to equity, so it will got all vanish, right? So now coming to the liquid MF, real estate and gold. So if you see to the left hand side, that is liquid MF, right? The approx return is around 5% to 6.5, and it takes around 11 years, right? Apart from it, it is having a lower returns even when the FD is there, right? But this option can turn out to be a good option when your amount is lying continuously in your savings account for around, for example, lakh rupees is already lying in your account just idle, right? So you can able to take this option because you don't have any locking period in this, right? You can able to withdraw in 48 hours. So even if you have any emergency, you can able to withdraw it in 48 hours, right? So real estate and gold. So we can also able to see the table over here. can you able to see the equity large cap, mid cap, small cap, equity ELSS, debt liquid. This all are the categories of the equity, right? Large cap, mid cap, small cap, ELSS, liquid. This is all are the categories of the equity. With the compared to the gold, if you will see, and if you are having a diverse portfolio between the equity, that large cap, mid cap, 10%, 20% accordingly. And if you see the returns, right, it is data by 17th of April 2020 from the Values Research Online. This all data have been captured from the SEBI registered investors website, right? So it's not my data or it's not my Excel giri that I have used for this. So if you can able to see the returns from the gold, the returns from the equity is much more higher compared to the compared to since last 7 years of the data, right? The only thing you can able to encash the equity. Have you ever thought, or have you ever come in your life till now? Because as per the demographics of the people who are attending the meeting, I think so you must be of around in mid 30s or maybe mid 40s, right? Have you ever come across in a life that you have sold off your gold and have encashed the money? I don't think so. Many of 99.99% you haven't, right? So I don't think so anyone will sell off the gold and able to utilize the money. But at the same time, you can able to do with the equity. So you need to have a liquid cash. At the same time, it is appreciating good compared to the gold, right? So this is a chart compared to the returns of the equity with the gold, right? So now coming to the LIC and the equity, right? Again, there are two persons. LIC ABC is a guy who has opted for the LIC. XYZ, a person like me, have also opted for the equity and also opted for the LIC both, right? So opted for a 20-year plan both, right? The coverage for the LIC is maybe 30 lakh cover on the death that you will get it to your nominee. Premium you must be paying around 6587 per month, so it comes around 12 6 72, maybe around 75,000 of 75 to 77,000 of the premium that you must be paying per year, sorry, right, in the LIC. On maturity of your policy, you must be getting around 32 lakhs, and if you survive, right, you'll get 62 lakh, and on unfortunate demise, nominee will get 30 lakh because the coverage of yours will be 30 lakh on the death, right, for the LIC. Now, if you will go for the equity, right, who have opted for the 20-year plan, right, not equity, sorry, if you opted for the term plan, right, that term plan, then coverage will be 1 crore on the death to the nominee, right? Premium, what is the premium that is going on for the 1 crore is, I think so, 1500 to 1800 per month, right? So you are saving around at least 5,000 rupees per month over here, right? I have shared over here that I will share the returns in the subsequent slides, right? So please remind me that I will share the returns of 5,000, what I am going to do with the 5,000 and what is the return over there. But on the sudden demise, right, nominee will get 1 crore over here for the term plan, right? And if you see the left hand side of the cash flow, right, from the age of 30 to the age of 50, the cash flow of the LIC, right, the returns are at least, I think so, 4.63%, and it varies to the scheme to scheme, like LIC Samruddhi or LIC Jeevan Suraksha or any of the plan. It comes between 4.63 to not more than 6%, right? So this is a bracket from where the LIC is there, right? So this is one of the tools that I am actually trying to go over here, right? So sorry. So till now, I think so. I think so. Any doubts or any question till now? You can unmute your mic and please, yeah, Rajneesh bhai can able to help me the opinion of the people who in a chat box, or maybe you can able to talk. No issues. Fair enough till now.
Sagar, what is the difference between liquid mutual funds and some other mutual fund you told?
Very good. So that is already covered in the next slide. I got your point. Thanks. So hope so. I think so Deepak ji have already raise the question about the real estate. That is going to be get covered in the next subsequent slide. First, his question will be answered, and then your question will be answered as well. Yeah. Any other till now? Everything is clear till now. Rajnish bhai, I'm just waiting for a green signal.
Yeah, clear from our side. Many of them are saying yes, it is clear.
Yes, yes.
Rajnish bhai, okay?
Yeah, Sagar.
Yeah, thanks, Rajnish bhai. Yeah. So you know all are you know this, right? This is nothing but the 7 wonders of world, right? Statue of Liberty, Taj Mahal, Giza, and everything, right? So do you know what is the 8th wonder of world? Can anyone able to tell me what is the 8th wonder of world?
If I'm not wrong, it's compounding.
Money.
Compounding interest.
Money, compounding interest. Okay. What else?
Money.
Pardon?
Money, paisa.
Yeah, money. Yeah, okay. Money and compounding. What else? Any other options?
Retirement.
Pardon?
Retirement.
Yeah, yeah. It's a very good suggestion actually. I forgot it. Sorry. Yeah.
I think early retirement.
Early retirement. Okay. So, Rehan, I'll just request you to play our video.
Yeah. Please stop your screen share.
King Shui Shan. I tell you the whole talk is in Chinese. Pleasure to be here with all of you. And last year I was with you through a webcam, so it's better to have a face-to-face interaction. And I really enjoyed the talk last year, and I'm looking forward to this year as well. So this session is in 2 parts. First part is my choice, and second part is your choice, where you can ask me whatever you'd like to ask me. And in the first part, what I'm going to focus on is there's a quote, I think it's a quote by Einstein, and he says that take a simple idea and take it seriously. So when you study a lot of successful people, so this goes beyond investing, if you study a lot of successful people, when you break it down and get to the core, you will find that the idea that made them so successful is really simple. What made them successful was that they were very intense and they were very fanatical about the idea. So, for example, even when I was walking here, I saw the yellow bicycles, and I was told that it was one of the London schools started at PTU. And the idea is not complicated, right? It's a simple idea. It's about the execution. So it's very important that when we find simple ideas that are very powerful, that we adopt those ideas in a very intense manner. And when we adopt those ideas in an intense manner, that's when you can have a very amazing outcome. So we're going to go back to a time almost 80 years ago, 1941, and it was in the middle of World War II, and the world was in the middle of blowing itself up. And while the world was in the middle of blowing itself up, there was a 11-year-old kid in Omaha, first name Warren, who checked out a book from the Omaha Public Library. And can we put up the picture of the book? Just press next. Next. So this is the book that Warren Buffett checked out when he was 11 years old. 1,000 Ways to Make $1,000. Very corny title. And the book was actually published in 1936. And if you go on Amazon or, you know, other websites in China, you can still buy the book today. So very easy to buy on your smartphone. And Warren Buffett, when he was 11 years old, read this book. And after he read this book, he thought he died and went to heaven. Because after he read the book at 11 years, he said that by the time I'm going to be 35 years old, I'm going to be a millionaire. Okay, so now the book is not telling you how to be a millionaire. It's only telling you how to make $1,000. And $1,000 in 1936 today would be around $15,000, approximately, I think, for 15x inflation, which is approximately 100,000 RMB. Okay, so all the book is saying is, how do you make 100,000 RMB? And what Warren was doing was he was overlaying two mental models. So the first model was the book showed him many ways to how to make $1,000. He needed some seed. This was the seed capital. The second was what Einstein called the eighth wonder of the world, which is the power of compounding. So at 11 years old, even before he was 11, he had figured out the power of compounding. And so he knew that if he can get the $1,000 and he can put it on a compounding engine, then by the time he's 35, he did the math, he was very smart at math, he would have $1 million. And what actually happened is that when he was 35 years old in 1965, he was probably worth close to, I would say, $8 or $9 million, which is today probably worth about 60, maybe 60 or 70 million. So he made it. What he said he was going to do, it happened. And I'm going to come back to the 11-year-old kid in Omaha in a second. We're going to put him on the side for a minute. And what we're going to do is we're going to go back about 4 centuries. I'm sorry, this is a history lesson, but we're going to go back about four centuries to 1626. Okay, so in the year 1626, the Dutch in North America were trying to buy the island of Manhattan. So New York City sits on an island. That island is called Manhattan, about probably 50, 60 square kilometers of land. And the Dutch wanted to buy that land. And that land is on where all the, epicenter of Western capitalism and so on sits today. And the native Indians who owned that land said, okay, let's make a deal. There were no bankers. And the deal was done in 1626 for $24. So Peter Minuit was the guy representing the Dutch. He gave the Indians $24, and the title of that property, which is now Manhattan, passed to the Dutch. Now when people normally hear this story, they say, oh, the Indians, they got taken. Look at Manhattan, it's so valuable, and just $24. But let's say that the Indians had a chief investment officer. And let's say they told their chief investment officer, listen, for the benefit of the tribe, for the next several generations, please invest this money. And we don't have high expectations. Please get us 7% a year. We're happy if you could give us 7%. Most of the people in this room will easily do more than 7%. So if the investment officer had delivered 7% a year, so there is something known as the rule of 72. Most of you are probably familiar with the rule of 72. But I'm saying the rule of 72 for the benefit of Elsie. Okay? JC, the rule of 72 is very important. More important than what your teacher at school tell you. Pay attention. Alright? So the rule of 72 is a simple way for us to calculate how long it takes money to double. So if I have a 7% rate of return, I can do 72 divided by 7, approximately it's 10. So it takes 10 years for the money to double. So if in 1626 I have $24, it means in 1636 I have $48, 1646 I have $96, and so on, right? Now, if I take 10 periods of 10 years each, that is $10. And 2 to the power of 10 is 1024. 2 to the power of 10 is one of my favorite numbers. I love that number. So 1024, let's throw away the 24 because it makes the math hard. So JC, we want to focus on 2 to the power of 10 is 1000, right? So if you take a period of 100 years, you get 10 doubles. Whatever you start with, you add 3 zeros. So 1626, you have $24. 1726, we have $24,000. 1826, we have 24 million. 1926, we have 24 billion. 2026, we have 24 trillion. But we went too far. It's not yet 2026. So we take away 10 years. And we take away 1 double. So 13 trillion. Okay, so if the Indians had invested the $24 in 1626 in a manner which gave them 7% compounded, they would today have 13 trillion. Okay, so what is the undeveloped land in the island of Manhattan worth? I don't know, but I know this: the total wealth of the entire planet is $400 trillion. The total wealth of every man, woman, child in the United States is $100 trillion. And just land 52 square kilometers in the United States cannot be 1/8 of that. It's much less than that because the whole thing is 100 trillion. So if the Indians had gotten 7%, they would have come out ahead. But they had a stupid chief investment officer who could not get them the 7%. And so they don't end up having 1/8 of the wealth of the US. And so this is the reason why Einstein called it the 8th wonder of the world. Now let's massage these numbers a little bit, okay? So we said the starting amount was $24. I'm sorry, it became 12 trillion, right? So it's $24 you start with. Let's say the deal was done in 1616 at $12. The outcome would be the same, right? Or 1606 at $6, same outcome. Or 1596 at $3, or 1586 at $1.50, or 1576 at less than $1. And you can keep going back, you'll get to 1 cent. Okay? So we go back further, you'll get to 1 cent, and 1 cent becomes 13 trillion. Right? And it became 13 trillion without using a high rate of compounding. We use a 7% rate, it's not a very high rate. And so now the rule of 72 is interesting because it's actually, what I love about the rule of 72 is it is what I would call elastic math. I love elastic math. So if you get a 7% return, it takes 10 years to double. If you get a 10% return, it takes 7 years to double. So you can interchange the rate of return with the number of years, and it still works. And so one of the most important things, I think compounding is one of the most important ideas to be fanatical about.
Yes, Sagar, please go ahead.
Yeah. So again, am I audible and visible again?
Yes, yes.
Yeah. Thanks. So eighth wonder of world is nothing but a compounding, right? So have you understood the video clearly? Is what it was understood?
Yes, yes. It was more about compounding, right, Sagar?
Yeah. So actually, how it works, that was more important. So compounding is the eighth wonder of world. So how we can now invest uh, the right proportion of money into a right compounder as per our goals. That is more important. So if you'll see, there is one more story of compounding, right? We all know the game of chess, right? There are around 64 squares in the game of chess, right? If you'll put one grain in the first square, 2 in the second, 4 in a third, 8, 5th, 16th, 32, 64, and if you'll end up at a 64th square, right? The 64th square is, it's innumerable. It's 2 raised to 1024. You can't even calculate the number. So the total wealth is not possible also, right? That you can able to, acquire that number, that much amount, or that much tons or millions of the grains, right? So that is the power of compounding, what I'm trying to tell you. This is a very old story, right? During BC, right? This is actually a real incident, and from that, this eighth wonder of world compounding came, and Mr. Einstein have actually, named the eighth wonder of world as a compounding. Right. So if you see now the Indian economy, right, now onwards, I think so from the subsequent slides and the subsequent things, we all came to know that, okay, equity is a good tool to invest, right? But if you see now, the economies of, compared to the global contribution to the world's GDP by the major economies from the first 80 to the 2003, right? You can see in the left hand side how the Indian economy is. Indian economy has went, it was actually contributing more than 30% to the world's GDP, right? Before 1700 of AD, right? Before 1700. And then it has shrunk, and right now it is contributing to less than 3% of the world's GDP, right? So India used to be a Sone ki chidiya at that time, right? Then the Mughals came, then Britishers Raj came, right? And right now it is at very shrink, means it has narrowed down, and it is contributing less than 3% of the world's GDP, right? And comparatively, if you see the China, right, again it has shrink, right? And but it has again trying to regain the lost market share that what they have previously, right? If you see the US, right, US is having a very small economy. See the way they are expanding themselves, right? Because of nothing but there are only two things that work in this thing. First is the reforms, and seconds are the policies, right? These two things came into the place, and the whole picture have changed, right? So this is how the economy works, right? This is a source from the economic advisory of India, Invest India, from the government approved report. This is not my made graphs or chart, right? This is not my claims. This is also from the same. If you see the strong growth since the liberalization of India in 1991, right, the exports were around 275 billion, and right now it's around 3,000 billion merely, right? So the GDP has grown by around 10 times, right? More than 10 times in 30 years, right? Country rank GDP has increased. It was 16th in 1991. Right now it is at 7th. GDP per capita have increased, I think so, merely around 8 to 9 times. Exports have increased more than 15 times. Imports have also increased more than 20 times, right? If you see the market cap of BSE 100 companies, right, it has increased again more than I think it's more than 100 times. Sorry, not 100 times. It's more than 15 times, right? If you see the foreign exchange, again, it has also increased a lot. So India is growing since last liberalization, and since last 30 years, India is growing. Population below the poverty line has decreased drastically. It has came down to half, right? So it is an increasing, though India is actually doing good now, right? Now, if you see, India is now seeing as growing in a top 5 economy. See, we'll first try to discuss on the left hand side of the chart, right, that ranked 5th by the nominal GDP, right? First is US, China is 14%, Japan, Germany, and India, right? China is altogether different. They are having their own league, right? So we can't actually compete with the China, because China is going to overtake even US down the line, maybe 3 or 5 years, right? But we are actually right now competing with either with Germany and Japan. You know, Japan is in recession since last 20 years, right? But it has not came across. Then also the GDP is still GDP is still growing, right? But if you see the market caps and the external market of Japan, it is still in recession, right? And India is ranked 5th in the US trillion. If you see the US GDP wise, right, it is, see on the left hand side, it is the 5th, and by the market cap, it is on 9th, right? Why the GDP is of 5th and market cap India is ranked on the 9th? Why? Only reason is people are investing very less in the equity, right? It is still a very virgin tool to get investment for the equity. Equity is a very virgin tool for the investment right now in India, right? It has not been like the US, right? The population in US is very, very small, right? Then also, if they are going to have a market cap of $32 trillion, right? China is at 6.8. We are at $2 trillion economy, right? We are actually expecting the economy to touch by 5 trillion by 2024 or 2025, right? So do you think it is possible? It can be possible if all the household income, all the savings of the Indian economy will come into the market, right? Then and then only it is possible. You know, the inflation rate, the FD rate in US is marginally compared to the India, right? They are having FDs are 1.5 to 2.5% FD rates in US, right? Because I do agree at the other side as well, because the inflation in US is not like in India. Inflation rate in India is 6.5% or 7%. You'll have your FD rates at 7% or 8%, right? While in US, you are also having inflation 1% or 0.5% or 1.5%. Accordingly, you are having your FD rates. So they are wise enough that they are getting returns. What is the return that they are getting at the end of the year during the FD? It's 1 or 1.5 or not more than 2%, right? But if you invest in equity, right, you are going to have more returns, right? Because if you negate the inflation from the returns what you are getting in the FDs or any other schemes, right, you are hardly getting any returns from the investment tools. So equity is the only good tool, right? And at least the Indian economy is doing good, and it is actually having it is actually at a growing stage. So we should invest into the Indian economy, right? So where should we invest now, right? Why should we invest? That what we have seen. Now where should we invest? So it is having a strong agriculture base, first or second globally, right? We are actually ranked 2 in the food grains, first in the milk, first in the cotton, second in the horticulture, second in the sugar, first in the spices, and first in the cropland, right? Major producers of agrochemicals, tea, cashew, jute, oilseeds are actually getting exported from the India. We are the largest exporters of the cereal products, cottons, bovine, meat, and sugar, right? All 15 major climates in the world, right, are only available in India, right? All major 15 climates of the world, in a sense of, you don't try to judge India only into the 4 seasons, right? That winter, summer, monsoon, and spring, or something like that, right? If you see as per the geographical conditions, right, I am telling 15 major climates in the world as per the geographical conditions for the crop, for the sugar, for the species. Accordingly, this is the best advantage for the India to have a 15 major climates in the world, 46 of the 60 soil types in the world, right? And that is why we are having and apart from it, that is why we are having a very good agriculture. So from the agriculture, we are also having a very good largest farm equipments, because if we are having a good agriculture, it is going to definitely, we need to have a farm equipment, right? So these are the some of the best things for India. Apart from it, strong industrial base, top 5 globally, right? If you will see this production of steel, cement, 2-wheelers, 4-wheelers, constructions, right? Electricity and wireless phones, right? We are actually dominating the market. If you see the compared to the top economies like US, second was China, third was Japan, fourth and fifth we used to fluctuate between Germany and India, right? So China is, and the way I told you, it is altogether different league, right? But if you see over here that US and China, Japan, right, where we are actually competing, right? If you see the numbers, right, we are actually number 1 in the steel production, right? We are number 1 in the cement production. We are number 1 in the 2-wheeler production. 4-wheeler production, US is actually leading, right? Infrastructure, it is still at a nascent stage. It is still at a growing stage, right? Electricity is, it is also at a growing stage. But in wireless telephone, again, we are at the first. So this is a strong industrial base that what India is having, and we are actually getting ranked into the top 5 of the world economies. Okay, sorry. So if you, the way we have seen, first for the agriculture, second for the IT and all the other things like automobiles and everything, right? But all this thing reflected in a very narrow market, right? You know, right now, you must have even heard that the GDP, the GDP or the growth of India is actually shrink, and it is degrowing by -23%, right? It is degrowing by -23%. Last quarter, I am telling you, Q1 2020, right? And Sensex or market is touching at 39,000, right? I think so. I can able to tell you for the last trading day of this, that is a Friday before 2 days, right? So it is also touching at a 39,000 again at the top. So why there is so much of disparity? Why is there is so much of disparity that India is showing a GDP of -23%? Sensex is going by 39. It's touching more than 39,000 of Sensex, right? Because it is reflected into the very narrow market of 30 companies. 30 companies of India is having a 51% of market cap, right? So Reliance Industries, HDFC Bank, Hindustan Unilever. So I don't want you to read the name of the company and read the figures of the company, right? I'm not even expecting. I'm just trying to show you over here the disparity. What is the market? What right now it is showing, and what is the economy right now where we are, right? So why there is so much of disparity, right? Only because of few things. These all are the very good compounders. So if I don't want to book loss, or if I don't want to risk my money, right, I'll try to hide myself by investing into these companies, right? So this is one of the idea behind it, right? This is one of the logic behind it, that okay, I'll do invest into this type of companies and I won't lose my money, right? That is why there is having so much of disparity. Now, apart from it, there are from all 20 sectors which are listed in the market, right? All the 20 sectors, only top 5 sectors, right, is equivalent to 70% of profits, right, for the India. right? That is banks and financial services. Like if you go to the HDFCs and Kotaks and ICICI, oil and gas, ONGC and Reliance, IT services in Infosys and Wipro, metal mining, Vedanta and JSW and all, FMCG, HUL, right? So these are the 4-5 top sectors which is contributing 70% of profit for the India, right? And if you see the right hand side, top 5 stocks of profit pool, right? Even if you see where the profit is around 3% in realty, textile, logistics, and diversified telecom, that is 16 to 20. The profit pool is only 3%. That 3%, right? If you see 89%, we are getting that share. From that 89% also, only 5 stocks are contributing around 80% of the profit in that sectors, right? For example, what I'm trying to tell you is, in reality, 3% is a profit from the 16 to 22 sectors. 3% is profit for the India. 89% of the profits, from that 89%, only top 5 players of the reality or top 5 players from the textiles are actually contributing for the 80% of that profit from the sector, right? So there is so much of disparity because of the intense competition, because of the intense emerging, unicorns and decacorns. That is why, because of this emerging players, because of the intense competition, everything is rising. Survival of fittest is actually getting in place. So all only 5 to 7 companies are actually surviving, right? And they are contributing in the sectors. Now, how the journey of the 40-year market is, right? That I'm just trying to showcase over here. So here are some of the key milestones that defined the journey of the Sensex over the years, right? If you see from 1979, that is when Sensex was at 124, and it has grown right now to 39,000 cross and maybe about to touch 40,000, right? See the graph of 2007 to 2012, right? In 5 years of period, right? Sensex was at 20,000 in 2007, and again Sensex has regained the same in 5 years, right, to 20,000, only because of the global liquidity, economic reforms, and fuels rally. So after that, from 20,000, now again there are ups and downs, there are leaps and bounds, but again it is about to touch 40,000 in from 2007 to the 2020, right? It is going to be double, right? So the way if you have heard me properly, the way I have already said, only 2 things have worked properly for the all the countries. First is reforms, and second are policies, right? So again, same things work over here also, economic reforms and global liquidity. Because of that, it took time to regain that Sensex from the 20,000 to again 20,000 into. So you just need to have a patience in that. So, and there are ups and downs, and because DII are investing very low into the Sensex, FII are having a very significant role because of that, right? Because of the FII factors, because of the external factor, because of the macros of the world, right? Indian market is right now getting impacted, right? Sensex is fluctuating right now. It is very volatile, right? Because only of the LAC condition right now in the China. Do you think if you are having a if there is a battle going on between China and India, right? Slightly, do you think that the company in which you have invested is going to be shut down, right? A company like HDFC or ITC or even small companies, is it going to hampered by that war? No, right? Because it is not going to have a war. It is just a 2 to 3 days of phenomena, and the volatility will come. Right now, there is an election is going to come between the Trump and the Biden in the month of November, right? So US market is also fluctuating. Because of US market, Indian market is also getting impacted, right? So it gives a very good, opportunity for Indians to get invested into the Indian market during the volatility. So volatility can be a very good friend of the people who want to invest into the Indian equity, right? So before coming and earning into the Indian equity, 4 hygiene factors before investing into the Indian economy. Term cover. You need to have a term cover plan, right? Term cover should be at least 10 times of the CTC, whatever you are drawing right now, right? So it will be helpful for the rainy days, in our rainy days. Medical cover, I think we all know how it works, right? Because we all are mostly, the people are from the demographic, from the medical and paramedical background. So the ideal cover of the medical should be 5 lakh to 20 lakh in cases of emergency. Accident and disability insurance should be moderate, at least it should be covered to 30 to 50% of the term plan. And emergency fund, because we all are working in a private private companies, right? We are not going to have any pension. So we need to have at least 6 to 8 months of expenses in our hand, including all the, you can able to foresee what I'm going to have, my EMIs, what, who are my dependables, my parents or my in-laws or my son, whatever you are having, you can able to foresee that, and you can at least have 6 to 8 months of expense in your hand before going to invest for the equity. Because in equity, you are going to have a long-term view and not a short-term view of 3 months, 6 months, 1 year, 3 year, right? You need to have a long-term horizon of minimum 5 to 10 years. Then only we can able to get a good returns. Because as I have already told in my last slide, there are external factors, maybe it work. So if you are investing in index funds, where from 2007 to 2010-20, the way Sensex have taken around 5 years from reaching to 20,000 to again to regain that lost peak 20,000, right? So you need to have your time accordingly. So these are the types of the fund that best funds of the 2020 it was. Right now it is not. And this is how, if you have invested 1 lakh rupee in 1995, right, when Sensex was at 3,110, right, you must have got around more than 1 lakh rupees by end of the 2008. So this is what actually I'm trying to show you over here, that invested money on 1 lakh in 1995, how much you can able to gain on year of 2018, right? So opportunity right now, as per the recent circular of the 11th September from the SEBI, 11 September 2020, just before few days, there are few funds, right? Value fund, growth fund, equity fund, debt fund. I think someone have also asked me that liquid fund. What is liquid fund, right? Multi-cap funds. These are all the categories of the fund. So people are having a multi-cap fund. Multi-cap funds are investing into the large cap, mid cap, small caps, right? So if you see the AUM, right? AUM of all the multi-cap funds, right? So AUM, I don't want to get into the technicality, means all the amount what this all multi-cap funds have invested is 1,42,267 crores. 1,42,000. Keep maths very easy. So keep it at 1.5 lakh as of now, right? If we try to take it 1.5 lakh CR, right? And now, as per the SEBI circular, what they have told is they need to allocate 25% compulsory into large, 25% into mid, and 25% into the small caps, right? If you see over here, right now the multi caps are investing 66% in large caps, 17% in mid caps, and 9% in the small caps, right? So now small caps and mid caps are going to explode, right? They are, the way I have told you, we are actually getting why GDP is degrowing and why Sensex is rising, only because all fund managers, all funds are actually getting a hide only into the multi-cap fund, and all multi-cap funds, 67% are actually getting a hide into the large caps, right? You think that you are diverging your risk by investing into the multi-cap fund, but they are actually conserving. They're actually not aggressive as per your expectations. They are actually conserving your wealth into the large cap, because they are also protecting your wealth and they are getting paid off. So they are also right at their point of view. But after getting into the SEBI circular and after into the compulsion of 25% allocation into the each, now small caps and mid caps, so there will be the equal proportionate. Now the way I told you that 5 companies in each sector are contributing around 80% of the profits. Now it will have proper balancing, and it will have a slightly equilibrium, right? At least by 70 to 30%. So how we can able to extract or filter out the small caps and mid cap, right? How we can able to understand it? So smile is the smallest way how we can able to look at the filter, look at the way how we can able to use this smile as a tool to filter the companies. The company should be small in size, medium in experience, large in aspirations, and extra large in market potential. If these are few of the things, then we can at least keep the companies that we can able to filter, right? That okay, I'll see to this companies, right? Because we can't have illiquid stocks and niche market in that, right? Apart from it, there are very many other filters as well. I have not included into this presentation as well, right? So minimizing the risk and maximizing the returns by having the portfolio diversification as well, right? How we can able to diversify the portfolio flexibility, risk optimization, optimal fund allocation, improves the portfolio efficacy by having a diversified into the multi-cap fund by, or maybe mega cap, large cap, small caps, maybe into the real estate, or maybe into the golds accordingly. So first and foremost thing, never time Mr. Market. Mr. Market is supreme, right? Only 2 people in this world can able to tell you the top of the market, peak of the market, and bottom of the market. Only 2 people. First is a liar, and second is a god, right? You can't ever time the market. One of the most intelligent in the world, in the man, right? Isaac Newton attempted to time the market. This is what happened to him. He proclaimed later, I can calculate the movement of the stars, but not the madness of the man, right? Control your inner madness. Market timing is not tough. Market timing is very tough, right? So if you have seen how the Newton have invested into the 1719, this is a real fact. This is not this is a real fact mentioned into the books which I have read. This is from there. I am actually quoting this. He has purchased the South Sea Company share price in 1719, right, at some few dollars, right? How Newton exits when he was happy. Now Newton has already given tip to few of the friends. Newton's friends get rich. Now Newton re-enters with a lot of happiness that okay, my now friends are getting richer, right? So I will again reinvest the same. Now again Newton re-enters with a lot of liquidity and lot of capital. The market get at a peak and now it falls, and Newton exits in the broke, and he has lost everything whatever he has earned, right? So he has proclaimed that I can calculate the movement of the stars but not the madness of the man, right? So only thing what I'm trying to tell you, because whenever you are timing the market, whenever you are going to get into the market, Sensex, what is Sensex? Sensex is nothing but it's a sensitivity of index, right? You are paying the price of that company or the share. You are not paying the value of it, right? So understand the beneath line or beneath value of the company, right? You just need to pay the price for the value of the company, right? So you need to understand the intrinsic value of the company. Until and unless you will understand this, you will never try to pry the market. So follow 3 steps for the wealth creation. Don't see Sensex daily. Don't listen media hypes, and don't ask for the best funds. Just invest for the long term and relax, right? Again, the road to recovery is not a linear, right? If you've lost 10% of capital, the percentage you will gain required is 11.11%. So if you have invested, if you have lost around 50% of capital in whatever you have invested in market, right, you need to have 100% of recovery of that script or of that fund, right? Then and then only you can able to regain your lost capital. So road to recovery is not a linear. That you need to understand it very clearly, right? So coming to the last part of my presentation, hope so. I am not bored you, and I've tried to fructify and fruitful your Sunday. So these are few of the treasures of wisdom from my journey, from my experience. Before redeeming from a fund, whatever you are doing, or say SIP, right? Because of the 6 months of a bad performance, ask yourself, if I had a 6 months at your work, I had a bad 6 months at my work, should my company fire me? I don't think so, right? So if my business had a 6 months bad run, would I shut down? If you expect the patience from your company that they should not fire you, obviously you need to be patient, right? Second, we don't appreciate a good market until we have been through a bad one. We don't appreciate a good health until we have been sick. So until and unless you won't get into the deep, right, you don't have experienced the bad, you never appreciate the good, right? Instead of wasting time on the discussing politics, macros, market kya lagta hai, kidhar jayega, right? You don't need to predict the market, right? You just need to understand what you are owning from the market. You should know you should know very thoroughly about the company which you are owning in your portfolios, right? Rather than on the macros of the economy. It is not going to pay you any of the value addition. Treasure of wisdom by experience. Money is a depreciating asset until you compound it above inflation. The way I've told you, the inflation in India is around 6% or 6.5%, or maybe 5%, 5, 6 or 6.5 if it fluctuates, right? But if you compound it more, then only you can able to enjoy your money. So building wealth depends not only on how much your money grows, but also on how long it grows for the compounding, right? That is a major thing that you need to have longevity. You can able to foresee what is the thing. Stock market is the only marketplace where people are unhappy when things are available at a good discount. When market is going to be down, if the Sensex is going to be 39,000 to 35,000, right? We all will be in tension. What is going to happen, right? Everyone will talk about that. But please, my dear friends, understand you are going to have a great discount, right? Get into the good compounders, right? If the price is low, get into it. If you don't increase your lifestyle in the proportion to your raising income, you are on a way to a financial independent. Debt, apart from the home loan, all debt, including the auto loans, mortgage loan, personal loan, top-up loan, travel insurance, any loans are all is a modern slavery right now, right? You are actually earning for them, right? You are not earning for yourself. Concentrations build wealth and diversification protects wealth. So you just need to balance it between the diversification and concentration, right? You need to have a concentration of the wealth if you are a seasoned investor, right? Warren Buffett, the legend, the supreme of the world, right? He is the only person who is having a 38 to 40% of wealth only in the one stock, that is Apple. If you don't try to take your risk, you are not a manager, you are a caretaker. So please try to take risk as per your age, as per your abilities. Good investing, it's 50% of psychology by controlling your emotions, controlling the euphoria, controlling the haywire, controlling yourself from the noise of the media, right? 48% from the history and 2% of the finance. You just need to have a 2% of finance. You just need to understand, to read the balance sheet, to read the annual reports of the company, right? Most people fail in the investing not because they lack intelligence, but the temperament. So information is not your edge, because all information of all the available companies are freely available on the portal for everyone, right? But discipline, controlling emotions, and long-term outlook are our edges to succeed in the world of the investing. Stock market attracts those who need fast money, but rewards only those who are willing to get rich slowly. The market loves to humiliate the boastful investors, and the richest person in the room is usually the quietest in the room, right? So the way I have told you, LIC to equity, if you'll have around 5,000 rupees of equity, if you have not allocated, I have told you that how it can be. So this is our main crux of the slide. Here, how to be a crorepati by starting out with just 5,000 investment per month. Option 1, investment of 5,000 in any of the SIP where annual return is around 20%, corpus down the line of by 25 years will be 1 crore, right? And if you increase 10% of the SIP every year, that is from 5,000 in first year, 5,500 in second year, 6,050 in third, 6,655 in fourth. Accordingly, if you increase 10% every year, and with an annual return of 12%, you will able to achieve 1 CR by 21 in 21 years, right? So this is how. So I'm trying to target and I'm trying to cover all the demographics. The people who can able to invest 50,000 per month, they can also invest. The people who can able to invest only 5,000 per month as per their capability, they can also invest in this type of tools. So this is from my side. So every investment has a different goal, and thanks for the patience listening. Rehan, just a small request from my side. Can you able to please play a small video, last video of our presentation?
Yeah, sure. Could you please stop sharing?
Yeah, sure. In a meanwhile, if you can able to share your feedbacks in the chat box, I'll be very happy to help you out, guys. Rehan, audio is not available. Rehan, audio is not available.
Yeah, done. Sagar, you can go ahead.
Yeah, thanks, Rehan. Yeah, so this is from my side. Be honest and be open to further discussion. I am okay with it.
Yeah, hi Sagar, this is Amit here.
Pardon?
Amit here, Amit Misra here.
Yeah, please.
Yeah, so thank you very much for that wonderful information. So I have one question, like which one is the best, like endowment plan? Many of us do endowment plan. If we take endowment plan, right? Am I audible or not?
You are audible, but not clearly. That's why I'm just asking.
Yeah. So endowment plan, LIC endowment plan is there, right? So what is the what you suggest? Endowment plan is best, or term insurance plan is best, or which one is the best?
Term insurance is best. LIC is not a good investment tool. That's what actually I'm trying to share over here.
So endowment plan, you mean to say it is not the best, right? Because already I have done an investment on endowment plan. I have taken Jeevan Labh plan long back. Okay. So apart from that, yeah, please.
So don't worry. I rest assured. Everyone is doing the same. Even you won't believe. Even my mom, my mother have already asked me and to invest into the LIC when I was at very nascent stage, when I've started my career, only for the reason that I won't spend my money anywhere else. That was the only motive for her at that time, right? So after gaining of a few of the knowledge in the investment, I asked my mom that, Mom, please stop the LIC policies. It is not going to pay any benefits to us. So she is still like, it's okay, you don't pay premium. I'll try to pay the premium for you. I was like, okay, I don't want to pay the premium. I just told her only because I was expecting that she may stop the policies, right? But she has not. The only thing is they are from the old school of thoughts with a very conservative approach. So they are also right at their point of view. But with the upcoming financial instruments tool and everything, LIC is not a good investment tool from my perspective, and that's what the investment is telling. So term plan, I think so you can go for the term plan.
So for suppose like already I have taken one endowment plan from LIC. Now I will be continuing with that. So apart from that, already I am having public PPF I have already enrolled. So now I am planning to take term insurance plan also, right? So so what is the difference between SIP and term insurance? Actually, I'm really confused on that.
Term insurance and SIP, very big difference. Term insurance is nothing but when you when there is some sudden demise of yours, right? Then at that time that cover will be going to get to your nominee, right?
Okay.
SIP is investing tool. SIP is what? Systemic investment plan. You are just investing a portion of your money, right? To and you can able to liquidate the same down the line 5 years or 10 years.
So which term insurance, which company you suggest? Like
term is not insurance, my dear friend Amitji. Term plan is a different thing. Term plan is a different thing. I think so you can go for the HDFC term plan. That is the best one. HDFC term plan.
Okay, so term plan is different and term insurance is different.
Amitji, term insurance, term plan is different. Term insurance is not anything. There is no such word like
terminology, right? I understood. Yeah. So term plan you mean to say?
Okay. Term, TERM, yeah.
Okay. Thank you. Thanks a lot.
Any questions from anyone else?
Sagar, this is Venu here.
Yeah, Venuji.
Yeah, I would like to understand only 3 things. So
this is Paresh Trivedi here. Yeah, regarding this term plan, there is one more option of ICICI which I have taken.
Paresh, your voice is slightly.
Sorry, can you come back? Once again?
Yeah. So regarding this term plan, you can opt for this ICICI Prudential which I had taken of 1 crore, which is a quite good option. If you can plan and you can take, it will be a good option for you.
Yeah, Venu, you can continue, Venu.
Yeah, Sagar, if I have understood your presentation correctly, you are suggesting to invest first in mutual fund, I mean equity, maybe it is in stocks or in mutual funds. That the priority of the order is. So the second is PPF and FD and RD. So if I have understood your presentation correctly. And of course, before all these things, you should be debt free from whatever except the home loan. And the first priority should be health, term insurance, and the
hygiene factors that we need to keep into the mind.
Okay.
Right. 4 hygiene factors that I have already shared. Just a minute. Okay. 4 hygiene factors. Before investing into the equity, right? 4 hygiene factors that we need to keep in mind. These are the 4 factors that we need to
yes.
We need to consider: term cover, medical cover, accident cover, and emergency fund.
Yeah, okay. So after building all these things, you are suggesting to invest to get the money for the financial independence, what you call. So first order should be your stocks.
Basic steps before any investment. Any investing, you should have this first, because by unfortunately our kid or our parents or our spouse, right, may get sick or any of the problem, right?
Yes.
You are going to have all the savings into one go.
True. Exactly, you're right.
So these are the 4 hygiene factors that need to be in place first of all.
Okay, fine. Sagar, thank you, Sagar.
Thanks, yeah.
Hi, Sagar. Thanks for the presentation. Priyam here. Can you elaborate more on National Pension Scheme?
National Pension Scheme. Okay, sure, Priya. I don't know actually what you can able to see in my screen. So Yeah, Priya. Is it visible now?
Yes.
You can't withdraw your money before the 60 years of age, and you can withdraw only 60% after even the 60% of age to reap the pension after the 60 after your age. That is what, and it takes around 7 to 9 years to get your person to double the money. So that is why, if you have understood, best thing is, as per your goals, if you start investing in SIP, right, this is the best option right now. The people who are not into the equity so much, right, you don't need time to get, or you don't need so much of time to learn equity, right? You just need to have few Sundays of yours per month just to go through the annual reports, transcripts of the call, and research reports of the companies, nothing else.
Okay. Thanks for this. Considering, I mean, there is some section which we get rebate in income tax, apart from section 80CD. So still we won't recommend, I mean, you won't recommend to go with NPS?
I don't recommend, actually. No, I don't. Even I am also in corporate, and I am also having that all 80C, 80B. I don't. I think so you can go for the ELSS then.
Okay. Okay, fine. Thank you.
If you see the same, if you apply the same ELSS in ELSS, the same amount with the same period of time, I think so you can able to reap more benefits in the ELSS rather than the NPS.
Okay, thanks.
But with the same discipline and with the same amount and with the same period of time that you are expecting in the NPS, accordingly.
Okay. Okay, fine.
Sagar, Anish. Hello.
Huh?
Yeah, Sagar, in NPS scheme, it's basically for the national pension scheme, so it is very secured, right? There is no source of risk which is there, so it's a risk-free, first of all.
Agreed.
Second thing is 60% you said that income on time of maturity, it is tax-free, right?
Agreed.
Okay, so would it not be feasible that a part of our investment, we can fix it in that? Because apart from ATC 1.5 lakh cap which is there, I think 50,000 additional which you can do it in NPC and get the tax rebate, right?
So accordingly, Anishji, ELSS is also mentioned into the ATC, right? So you'll also get a tax rebate from the ELSS. At the same time, if you have seen how the Sensex moves, right, with the period of time, from if you are going to invest in NPS not for the 5 years or 2 years or 3 years or 10 years, you are going to invest minimum for 15 to 20 years into the NPS. Agreed? So if you are going to invest the 15 to 20 years into the ELSS with the same amount, right, with the same uniform period of time, for the same interval of the time, I think so you will be able to have a good returns in ELSS compared to the NPS.
But Sagar, I have seen couple of my mutual funds also. After 6-7 years also, it is around 5-7%.
So that's what it depends actually which funds you opt, right? So you need to at least invest few times, because I am telling you that whenever we used to purchase the stock, right, I don't see the stock price moves every daily or even monthly, right? I only used to see it quarterly. The only thing is everything should be in line, what we are expecting. So you can able to churn your portfolio maybe in a quarterly basis or maybe in a half yearly basis. Accordingly, you can able to do it.
Okay.
So you need to churn your portfolio.
Sagar, this NPS returns you have mentioned as 8 to 9%, right, annually. Like this PPF is a guaranteed return of 8%. This NPS 8% or 9%, what you are showing is a guaranteed return, or it is a market linked?
No. NPS is guaranteed return.
Okay, fine.
I think so. Where is Rajneesh ji?
Hello, I have a question. Let's say even if now after this very insightful session, I want to invest in market and I want to start with it. So how should I proceed with, in which mutual funds, in which scripts, or in which sectors, and in what manner I should go ahead and by selecting them, and how much effort and time I would have to provide for that?
It's a very elaborating question, right? You just need to invest right now in sectors or the scripts which are most battered down. Right now, the market is at top, but the small caps and mid caps are at bottom. From maybe Monday, it is going to rise, right? So the most battered segment right now, right? The most down segment, like for example, real estate, for example, NBFCs, right? So in that segment, in that sector, you can able to invest accordingly. Apart from it, if you ask me for the scripts, if you go into the small caps and mid caps, try to have the market, try to get yourself invested into the market leaders of the small caps, market leaders of the mid cap. So you are actually taking a defensive position and trying to de-risk yourself.
Understood. And do you want to tell anything like about how much time or effort that I will require for such things?
Time, I think so. You don't need more time, right? There are few of the tools that you need to have, and you just need to look what are the updates of your company, what they are actually giving the circular to the BSE or NSE, that you need to have a look. You don't need to invest so much of the time, because even I am also working in a corporate, so I also need to balance it. So I don't think so. We need to have more time. We need more time into the markets. Very less of the time.
Sagar, for beginners like me, for SIP program, how to go forward? Like what is the tool? Like I don't have any idea for SIP. So what you suggest? There are a lot of apps and many things are there.
So I think so, Amitji, we can able to talk this separately and personally we can able to take. I think so. If in the interest of the group, I think so. If any other people are having any other questions, because Amitji, for your question, we need to start from the very nascent stage. So I think so. In the interest of the group, I'm actually telling nothing else, Amitji.
Okay, fine, no problem. Yeah.
Anything else from anyone else? Rohan bhai, Rohan, Jennifer, Banu, Keyur.
I'll be connected with Concall along with Amit. So because even I'll be in nascent, na? I'm also in a nascent stage. So जब अमित के साथ Concall होगा तभी मैं भी आ जाऊंगा.
No issues.
So I can understand better. अलग से करने से I will do it together. So queries will be resolved faster.
Sure.
Yeah, Keyur here. Just wanted to know something about this liquid fund you are comparing against FD.
Very good, Keyur. I seriously, I have missed that. I think so. Liquid fund. I have mentioned emergency fund in the 4 hygiene factors. Emergency fund I have mentioned.
Yes.
Right? Yeah. So when your emergency fund maybe of around 1 lakh or 2 lakh, depends on the lifestyle of yours, right? You can able to invest that emergency fund into the liquid fund, right? So that even you will earn few slight amount of interest more compared to the savings account in which you have invested. So that emergency fund you can able to invest into the liquid fund. Why liquid fund is beneficial? Only because there is no lock period. There is you can able to withdraw it in 48 hours and it is very safe. Your capital is conserved totally.
And tax benefit as compared to FD, is there anything, or
no,
it is the same?
Liquid funds are not having a tax benefits. Liquid funds
No,
are
I just want to know.
They used to rotate it in a 10 days or a fortnight time, right? For people like me and you, right, we will going to have a liquid fund for around 2 months or 3 months, right? For H1N1, high net worth individual, HNI, right, high net worth individual, they used to invest in liquid funds for 10 days, 15 days. They used to invest around 5 CR, 10 CR for 10 days and 5 days. They will take interest and get rid of it. Even the companies, right, a small cap companies, they are rather than keeping the cash reserves into their current accounts, they will block that account, block their money, cash reserves into the liquid funds and earn interest on it.
Yeah, Sagar, just wanted to learn from you. If you want to have against FD any mutual fund fixed deposit like, so which are the funds if you keep for more than 1 year, you get the benefit of indexation and ultimately save some tax?
Just a minute. Just a minute. I'm just sharing it with you.
Yeah.
Is it visible?
Yes, yes.
So this is my answer, dear, because I can't tell you which fund. The way I think so. Previous person has already asked me that Sagar, despite I have been investing in MFs since last 5 years or 6 years, the returns are around 5-6%, right? So you need to monitor it. You need to churn it at a regular period of time accordingly, because right now maybe ICICI or HDFC will be at top, right? Down the line 3 months, or sorry, 3 years, maybe Motilal Oswal will come on top. Are you getting me what I'm trying to tell you, Keyur?
Yes, yes.
So accordingly, we need to churn it.
And how about investing in gold ETF?
Gold and ETFs are not going to pay you much more, right? I think so. I've already shared it in my slides, the returns from the equity and returns from the gold. Sorry, can you able to see this?
Yes, yes.
Equity is obviously having the upper hand.
Sagar, Venu here once again.
Yeah, sure. No issues with it.
See, just a term plan. Which plan you suggest? I would like to go with LIC only. You would like to give any suggestion?
HDFC is the best.
Term plan.
HDFC insurance, term plan.
Okay.
HDFC medical. Go with the HDFCs. Their settlement ratio is good.
Okay, fine.
Sagar, what would you comment? Sorry, I'm intervening in between. What would you comment about SBI? Because I have a term plan of 1 crore already, but I have with SBI.
No issues. SBI is the largest PSC, right? And if you are having a term plan, it's okay. No issues.
Okay, thank you.
Right. So I think so. Now people are also getting off, right?
Hi, Sagar. Jennifer here.
Oh, Jennifer. Hi. How are you?
Hi. So at the outset, first of all, amazing and very insightful session taken by you. It was really amazing. So, so my question again is something that you can take offline because I am also very nascent when it comes to investing in mutual funds. So with limited funds, what I've done is I have taken advice from the mutual fund advisor and put it in some funds. But however, I need to, understand better to how to evaluate, how to assess whether I'm doing well or not, whether to put it or churn it into something else. So maybe you can take that offline with the others.
Sure, Jennifer. Definitely. I'll do that for you.
Thank you so much and very nice session.
Thanks, Jennifer.
Thank you, Sagar. It's a very nice session.
So thank you, everyone. Thanks for your participation and showing your enthusiasm. Thanks for the comments. Thanks to everyone. Right? I think so. Now we'll go off. Thanks to everyone.
Thank you so much, Sagar. Thank you for taking all the
Thank you, Sagar, for taking out time and giving us insightful presentation. Thanks.
सुना ना पूरा?
Yeah, बिल्कुल बहुत अच्छा था.